Hey guys, welcome back to another mini lesson with Take Profit. My name is Denarius. I am I am one of the founders of Take Profit, and uh, I'm putting these videos out for beginners mainly. Um, it's their chance to get the information clean cut and efficiently, and that is what I'm doing with these videos. I want to get them the information as clean as possible, no miscommunication or misconception uh, from this channel. I want to do it as clean as possible. And uh, you can consider this channel trading for dummies. I'm not calling anyone a dummy, but I want to. That's the level I want to break it down to, is a dummy level of trading. I don't want it to be all complicated how it looks and seems and how people make it look or whatever. But yeah, let's get right into it. Today I want to talk to you about how traders can tell and identify when the market. First, I want to talk about what support is and what resistance is, and I want to show you what support and what resistance is in this video. And what first I want to tell you what support is. Support is when price finds a point in the market. So let's say price comes down to this pin and it hits. So let's say that's the floor, and this is the mark. My finger is the market, and the market finds this floor. So that would be the support where the market hits, because the market is showing trouble getting through this barrier in the market. So we call that barrier the floor, which is support. The floor is nothing but support. So what happens when you bounce a ball off the floor? It bounces up a little bit. Probably not at the same force that you threw the ball down at the floor with, but it bounces up with some kind of force or magnitude. So when price finds the floor or support, it pulls back and it bounces off the floor. And that's how traders know whether the market has made support in the market or not, because price is failing to break through that floor or that barrier in the market. And vice versa. Let's say we're talking about resistance. So price moves up towards the pin and it hits. Price can't get through this pin, this barrier. So this barrier was what we would call resistance. The price is failing to get through this point in the market. This is resistance. It's not going through. So what happens if you throw a bouncy ball up to the ceiling? It's going to bounce down, come back down a little bit, with maybe not with the same force, but it's not going to go past that ceiling. So essentially, that is what we call resistance, when it's failing to get past the ceiling, that barrier. So that's the ceiling. It's ceiling down. Your ceiling is supposed to keep everything out from coming in and everything from in coming out. That's the ceiling. It's a barrier. Same thing with the floor. Your floor is doing the same thing. It's keeping you from falling through the floor to the basement. That's all the floor is doing. Price is going down to the floor and bouncing up. So this is what support should look like when you're looking at a market. So let's go support equals it's not made as big. Support. So bearish and then bullish. So market has found support. Support is nothing but it's nothing but a bearish, bullish candle formation. And then vice versa, same thing with the resistance. Equals nothing but vice versa. So the dotted line would be support up here, and then the dotted line up here would be resistance. I'm showing you resistance. And resistance is nothing but a bullish, bearish candle. And as I said in the previous video, it doesn't matter. It doesn't matter what color your bullish and bearish candlesticks are. You have to identify the open and the close of the candlestick to determine whether it is a bullish or bearish candlestick. So that is important to a trader because bullish bearish or bearish bullish determines whether it's support or resistance. And it's key that traders know this concept and idea. And when you have a bearish bullish formation, that simply just means there equals a floor. Price found floor. Vice versa equals price found ceiling when it was a bullish bearish formation. So this concept's quite simple as well. Can't make it complicated. And the market's telling you here that, hey, we're at support because we have this bearish, because we opened high, closed low. We opened high, closed low, closed. That's the key. We closed low. And then the next candlestick, hey, we opened low and we closed high. Hey, we opened, so we're bullish. So that's tested, that's support. I'm gonna draw that line on my actual computer, on my phone. This support. Those two candlesticks make support, forming like that. Vice versa. Hey, we're at resistance. We're at the ceiling. Price is failing to get through this ceiling. So it's going to form bullish, bearish. Why is it forming bullish, bearish? Because it opened low, closed high. This candle opened low, closed high. Then the next candle opened high, closed low. Boom. We're at resistance. Sorry, we're at resistance. It's very important that we know this. Very important. And that basically concludes our lesson for today. It's nothing simple. I want to keep it simple, clean cut, and concise, precise. And I don't want any misconceptions coming from my channel at all, because trading is really simple and fun and easy. And once you learn the basic concepts and things that happen in the market and why they happen in the market, traders are going to be better off in the market and less intimidated and more confident. And that's all I want to provide, is confidence and confidence in the system. That's all. And I want to thank you guys for tuning back into another Take Profit video. Again, my name is Denarius. I'm one of the founders of Take Profit. And we just want to get profits. That's it. Profits is our main concern only. And the only way to get profits is if you practice the craft. We're always practicing our craft at Take Profit. We got special things coming. We're always working. We're always working, and we have different ways we prepare ourselves for reading the markets and the charts live on computer. We do something off the computer that helps us sharpen and refine our skills. we don't even look at candlesticks when we get ready to look at the markets and the charts. We get ready using a different tool that I'll tell you guys about later in a later video. But yeah, man, I'm just here to help. That's all. I'm posting these videos because I've been there. I've been trading for 5 years, 5 years now, 2.5 on demo, and then recently these past 2.5 I've been live in live account. I have 3 trading accounts. I have I trade with one of my brokers are with Traders Way, KOT4, and Hugo's Way. Those are my 3 brokers that I broker that I do business with when it comes to trading, and they're all pretty good. It's really just all preference, and it's all subjective at that point. A lot of this stuff is subjective, and it's how you view the markets, because everyone views the markets differently. No one's going to view the markets the same way. People may identify their support differently than I identify my support, but as far as what I know and as far as what I've seen, support and resistance is always identified this way. I would definitely use this way. This way is guaranteed to identify support and resistance. I'm pretty sure of it. But yeah, stay tuned for the next video. I appreciate you guys. Please drop your comments, questions, or concerns down in the comment section, and let me know how I can make these videos better and help you understand things better, and just help me, because this is my first time doing anything like this. Really, we're putting ourselves out here by even putting up these videos. So just stay tuned, and I appreciate and we appreciate the support. Take profit out.